Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are down about 80 points this morning in the S&P. We are coming down very, very hard after we saw the overnight more coronavirus scares and news over the weekend as well as overnight. So how do we react in these kind of markets where we're seeing strong sell-offs? If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. Real quick announcement is that on the 1st of March, we're going to have a free preview week. So go to TradersArmy.com, become a free member, and you will get access to our free preview week to join our live trade room. Some of the trades that we looked at last night, you will see some of the lines of were from last night's live trade room. You don't want to miss the Sunday night trading opportunities. All right, let's go ahead and dive in. So on the ES, last night we had seen the gap occur, and we actually had a little demand area here, and the market did give us a little bounce off of that demand area, but it didn't hold, and we didn't expect it to hold. So one of the things that we talked about last night was telling people, if you took the long, take your stop, move it to break even when we had this little bit of profitability in here. Because my fear was that we were going to come back down, and we did. And so what we did was we said, well, let's take a little opportunity for a breakdown below 32.89. So if you missed the gap, you still had the breakdown opportunity there at 32.89, and it moved about 40 points from that area to its lowest point. So very strong breakdown trade if you missed it. Now, we've rallied up off of those lows, and we had a little 15-minute zone, but one of the things we talked about was every level down below us now becomes a confirmation long since our big picture has shifted directions. This is the area that I was anticipating kind of being our final target, but when I look at my 4-hour chart and my big picture 4-hour time frame, we've got a little bit of demand in here where we're getting a little bit of a bounce, but nothing major to lean on. So what would I look at for today? Well, if we get a strong rally back up, I'm going to wrap my lines around this little wick over wick level. Now, if you missed Friday, I posted a video on what to look for in wick over wick levels, but this would be the wick over wick level, knowing that our stop is still going to be somewhere up above this region. So there's our area that I'm looking for in the S&P. We may actually, continue to head down from this wick over wick level right now. And so if you get this in the next little bit, it makes actually for a really good candle to candle opportunity. NASDAQ, very similar picture. Now, I will say this in the NASDAQ, we were looking at this wick over wick as a chance to get back in. And we did get a rally back up into that level, as it gave us a bit of a touch, and that was the where we fell from. That's what, if we come back in, we had gapped down. We did take a look at this demand area, switched it to confirmation. We came down to the next area of demand, so the confirmation level blew through. No big surprise there. Came down to the next level of demand, and we're starting to get a little bit of a rally. But very similarly to what we have in the S&P, if you got that rally, I really like this wick over wick area for a short. That rally's moving pretty well, 1, 2, 3, or 4 candles into it from the entry. So if you took that one, I think now's a good opportunity to take your stop and move it to break even, especially with the weakness we're seeing right here. Matter of fact, I would probably take some off the table when we get up to this region in here, because this is a great reversal area, especially based on the time of day. Crude oil. So in crude oil, we've actually, after our strong gap down, we've come back into a little bit of a demand area right in here, and this is off the 1-hour chart. So off our 1-hour chart, we've come into the area of demand, but we haven't really gotten a strong move away from that zone. Now, if I look at the 4-hour, technically we haven't created a downtrend yet because I don't have a lower swing low or a lower swing high. So we'll see if we get a decent bounce off of this candlestick here. It doesn't look like it at the moment. We're 1, 2, 3, 4 candlesticks in. Remember the 6 candlestick rule. If we've not gotten a pretty big move off of this at that point, then we're going to want look elsewhere. But I think that, as far as today goes, look up here for a potential reversal area if price indeed returns. Gold, no surprise, continuing its strong move higher as we are seeing gold still keep its strong bullish momentum. And gold is really the safe haven right now as we're seeing gold really go straight up. That's the strongest of all of the markets that we're seeing the move from, and this would be the return place if we drop back into this level for a bit of a rally. Moving over to bonds and our currency markets. So in our bonds and currency markets, we're seeing that we have in the ZN, we've continued our rally higher, gapped up, got a little bit of a pullback inside this region. I think that I would need somewhere into this area here or a basing spot for a breakout above here. Either one of those. So breakout above here or pull back down into this region for a reversal. In the Aussie, we looked at the gap and go trade yesterday in the Aussie, and we did get our entry on the gap and go as a potential entry. Unfortunately, it really hasn't done anything since that point. And in doing so, we're now technically it still hasn't hit your stop out point, and so there's a good chance it can continue to run down. So you may or may not have. If you're not in this one yet, I still think that the better probability is for price to continue to trade down. Just wait for price to get back down below here for your entry. Inside of the euro we are. Have a little breakdown area here, still in between that level. We got a little supply level up above us, and we're trying to kind of going sideways inside of this channel, of this band in the range here in the euro. Now this level here, this is a rally, a little bit of a base, and then a very strong drop, which includes the gap. We didn't do the gap fill level here on the euro because I felt like this level was better up above. And the Canadian dollar, we did get the breakdown in the Canadian dollar. We talked a little bit about it last night. And that breakdown finally did occur. We had a little reversal point in here where we thought there could be an opportunity to get in. So we hit the reversal point, and then if you missed the reversal, you did get the opportunity. It did actually wind up going on the breakdown. Belief is that price will continue to come down from that region. Next, Great British Pound and Japanese Yen, looking at the pound level. So last night's trade in the pound was very effective as we did the gap fill level inside of the British pound, came down a very nice move away from that level. I think your next trade in the pound would be a breakdown below this line. If we get some basing in front of that line, I think that's your next opportunity in the pound. And then the yen, we were looking at a breakdown inside of this region. We did get a little bit of halfway into this level, traded out of it, and then 6 candles later it had done nothing. I still think this is a breakdown area in here from this point, provided we get the basing for a chance to fall down from this region. If that doesn't occur, keep an eye on this wick over wick area that we have right here, which is also halfway through this big pullback. Copper, we'd come into right near our copper area of demand. We've got a little bit of a confirmation long in here. We're basing in front of the level, which makes it very, very weak. So I'm going to remove that trade altogether since we're basing in front of the zone. And I would also look right here at a potential breakdown if we get basing now inside of the zone. And then nat gas, we talked about a gap and go last night. Took that one in the classroom, and it's moving along pretty well. If you've got this one, I think that we've put in a little bit of a pivot area here. Take your stop, move it down into this region here, above this pivot here, just so that you make sure you've locked in some profit at the very least, and you've got a little bit of an opportunity in there for price to move back. So just remember, on a day like today, don't overreact. Don't try to run out in front and try to chase the market. Allow the trades to come to you, and look for the right opportunities. But make sure that you are utilizing your stop losses and understand the risk. We talked about the risk of holding of holding these things over the weekend, and that's exactly what happened. Right, it was the holding of these positions over the weekend. We saw a really big move down. So just understand your risk and your exposure before getting in. So that's all I have for you, everybody. If you guys have a great day, if you need anything, shoot us an email, support@tradersarmy.com. I will talk to you soon. Later.